Well, hi folks, it's Stratman here from pipware.com. Just continuing on the series of videos on building a strategy and the building blocks of a Forex trading strategy. The main building blocks, as I see them, or components, are first price action. So that's candle patterns. So we're looking for reversal patterns and so on. The second component is a moving average to determine trend direction, and then the third component is oscillators to filter out bad trades. So the video today is on oscillators, and right now you're seeing one of the oscillators I use, which is the Trix. Not as familiar to most people as RSI and stochastics and so on, but anyway, oscillators are found up here on the main menu of MetaTrader under oscillators. You've got Ishimoku, stochastics, so on. You can see the kinds of things that are considered oscillators. I quite like the stochastics. In fact, within MetaTrader there's a really good template. If we just open up a new chart, there's a template built into MetaTrader with that uses the MACD oscillator and also uses the stochastics 833 here. I played around with this particular system here, or strategy, and it's quite good. Works really well. So I thought that what I might do is try out different ideas of colouring this. Like if we go back to my THV one, which is here, you notice with the coral, I like to show when something's flat and when something's considered bearish, we've got red, and when something's considered bullish, we've got green. We did exactly the same thing with the Trix, but unfortunately there's a bit of a limitation in MetaTrader. MetaTrader's only got what we call 8 indicator buffers. To create this coral, I actually had to use up 5 buffers. So you imagine if you had 2 trend lines here and they were all 3 colours, so I had yellow on the peaks here on the flat bits and red and green either side, that would have used up 5 buffers, and this would use up 5 buffers for the other one. So yeah, had to opt not to do it. So so we ended up with just 2 colour indicators here, but fortunately with some oscillators we can change that. So what I did was I made a coloured version of the stochastics oscillator. So if I just cruise on down here and grab that out, here's my colouring, same as the coral here, the THV, and there we go, there we have it. So basically what this oscillator is saying to us is, look, when stochastics is pointing upwards, we're gonna trade long. When it's pointing downwards, we're trading short, as long as price action and the moving averages are okay as well. And during the flat periods, we're basically going to be standing aside, probably won't be entering a trade. So it's easy to find tons of systems out there that use stochastics, and let's just go and have a quick look. So we'll jump onto Google. And if you just type into Google 40 to 100 pips, that's what I'm after per day. My target was about 40, but hey, look, it's pretty easy to get more between 40 and 100 pips a day these are now, using the systems I'm using. So we'll go and search for that, and we find quite a few systems kind of laid out here. We'll go and have a quick look here, and here we go. So he's learned about this. This can be learnt within 1 hour. I mean, it's a great little system. Basically what it is, it's all about using down here. You can use it on any time frame up here. It uses the 15-minute candle chart. That's pretty good. That's what I use as well. The indicator is based on the slow stochastic setting of 833. Some platforms are 8.3, so that's good. Like I said, the default stochastics is 833 on that template we showed in MetaTrader, and that's talking about using inside bars, which is fantastic. So whenever you have an inside bar, the market is consolidating into a tight range of low volatility. The market will always explode out of this tight range. So there we go. That's doing the price action stuff we mentioned earlier, inside bars. Now, what this guy says is when the stochastics are below or around or a bit above the 20 and oversold and hooking round for an inside bar, or when the stochastics are 80 and above and a little below and hooked round in an overbought look, then look for an inside bar. So the whole idea of this strategy is to try and find inside bars and find situations where stochastics is turning pretty much on these levels down here. So making this yellow here is pretty good, because then we know when it's flat, so we know when it's kind of hooking around. The other thing is that you can see the signal line is crossed over. Well, you're crossing this other line here, so typically when it's coming out of this yellow here is when we're coming out of the overbought side. So if we found an inside bar at this point, we'd probably want to trade it. So let's look at some more examples of that. For instance, let's try and find one of these kind of setups. Okay, here we go. Here's an inside bar. Here, that's an inside bar. What did the guy say? When stochastics is turning and coming out of the oversold position, in other words, stochastics is sloped upwards and heading away from this bottom line, and we have an inside bar, he's saying place an order just above basically that candle. So we place an order above the candle, and hello, we can go long, and it's a good trading opportunity. So that was your entrance, but in this case a bit difficult. I mean, it's probably not the best scenario because we've got this particular moving average in the way, so it's not something you would use with the THV system. But if you set up your moving averages correctly and so on, you could really use this stochastic system quite well. So let's go back to that and just look a little bit more. So to enter a trade, wait for the next bar after the inside bar to go up by 1 to 2 pips higher than the inside bar for a buy signal, or 1 to 2 pips lower for the sell signal. Use the stochastics as a setup of when to trade the inside bar. Okay, so also the shadow of the inside bar counts as the bar. Okay, so I mean this is quite a good strategy. I really like this. It seems to be quite profitable. So there we go. That's how you can use an oscillator to try and enter a trade. And another way to try and use an oscillator to keep out of a trade is if you, like, obviously when the price is way over and oversold here, potentially we don't want to be entering any short trades at that point. So we have to really consider that quite carefully. Maybe, an ideal opportunity would be kind of like there's kind of an inside bar happening just here, and what we could do is, like you said, put a sell order right here, so that when this bar breaks it, because we'll be moving away from our moving average then, so when this bar breaks that, we could trade downwards, and we'd probably want to be looking and seeing where stochastics is at that point. And look, it's not quite oversold at that point, but it's just it's hooking around out of a flat area, not quite on these two areas here, but that's potentially a good way to get into a trade as well. So there we go. There's the video on the third component of strategies. So we've got price action, inside bars, 1, 2, 3 patterns, so on. We've got moving averages. For me, I use 60-period moving averages, the 3 duck strategy, and I use the tricks for my oscillator, not that well known by most people, and I also use stochastics as well. Hope that's been really helpful to you guys, and we'll catch you on the next video.